Hello, everybody, and welcome to the monthly market memo for the month ending October 2024. I'm Case Eichenberger, the Chief Investment Officer with Retired Path Advisors. And in this month's market memo, we wanted to discuss a little bit about what we've seen so far in 2024 regarding this great bull market we've been experiencing, but also talk a little bit about the future here for the rest of this year and going into 2025 as we near the end of this election year. So let's go ahead and get into it. And I do have a lot of great visuals to share with you to kind of walk along with me as we go through this month's memo. So far in 2024, the S&P has been marching higher and higher and higher. We've had a little bit of volatility throughout the year, but really not much. I think that the average pullback so far has been about 8%, which is a little bit less than what we typically see in any given year. Stocks are set to be about flat for the month of October and bonds a little bit negative for the month of October, but over the year, both are still very much positive. Now, we are nearing the end of this election cycle. Stocks do remain in an uptrend. And as I mentioned earlier, volatility has been subdued so far for stocks. Now, for bonds, that's a little bit of the opposite. And I'll kind of touch on that here in a minute. And then what we want to focus on towards the end of this presentation is after the smoke clears from the election and we're decided, who's going to be the next president, who's going to be in control of the Congress going forward, we can really get back to what really moves markets over the long term. And that's our US economy, the global economy, the profits we receive from corporations. And I want to note we are also entering a very seasonably strong 6 months of the market, as November, December, all the way through April are typically very strong seasonal points to be invested into the stock market. And then finally, at the end of this presentation, I wanted to share, regardless of the result, red or blue in power, market history does tell us to always remain optimistic and remain invested and remain diversified. So let me jump into a little bit of these visuals that I wanted to speak to. And 2024 has been a great bull market. Really, over the last year, it's been a great bull market. As I mentioned here, we've seen about actually exactly 47 new all-time highs in 2024 alone. And that's what this chart is going over, all the all-time highs and the dates that we hit those all-time highs. The S&P 500 as of a couple of days ago, October 18th, was up 24%. Now it's kind of hovering around that, maybe a little less than that right now, but up 24% on the year is fantastic. And over the last 1 year, I believe it's over high 30%. So it's just been a fantastic bull market. And we really do think this can continue. There's a lot of good reasons. The economy is on strong footing. The jobs numbers are robust, even though a little bit less than where they were coming after COVID. Unemployment rate is low and near the averages. Inflation is coming back down near the long-term averages. We also have, as I mentioned, good seasonality ahead of us as far as November, December to be in the stock market. And putting all that together, you also have corporate earnings coming in very strong for 2024 and expected to be also strong again for 2025. And then the last thing I would note is why this bull market can continue is the Federal Reserve. The Federal Reserve already cut rates by 50 basis points. Now that lowers our CD yields we get, at the bank. Not so great for those ultra short fixed income investments. But whenever the Fed is cutting rates, that's typically a very bullish sign for the stock market. They are expected to cut another time after the election, which is just a couple days after the election, by the way. It's going to be about 0.25%. So that is what we are really expecting. And again, anytime the Fed is cutting rates is typically good for stocks. Now, leading into the election, I've mentioned this in the last couple of videos, we did expect stock market volatility to really increase. It was prudent to think so. We talked about how we manage your risk in a lot of various different ways. As I show in this chart here, you see as we run up to election day, the volatility gauge, which is the VIX index, something I follow very closely here, typically rises. And actually, October, so be it, has been one of the most non-volatile months in a long time. So we actually did not see much stock market volatility. We did see a little bit more bond market volatility as the Fed cut rates and we've seen strong economic news. The bond markets actually moved higher on their yields on the longer end of the bond market. But getting back to the stock market, what I wanted to show in this chart is really after election day, you see that line come down. Volatility is expected to subside. Typically, it does subside. Now, this year could always be different, of course, but this is what we look at when we look at market history: is volatility does subside after the election over and we head into inauguration day. So typically, this market could be different. This year could be different for the president, but we do expect volatility to kind of get back to normal areas, which is where it's at right now. Now, after the election is over, you see here, markets typically have a pretty good election year, but actually after election day is where you see a lot of those gains. The stock market has shown to be very positive in November and in December after the election is over. Now, again, that doesn't matter red or blue. Just note that after all that uncertainty is over, we kind of get back to what runs markets in the long term, and that is fundamentals from the economy and the corporations. This goes without saying, but staying invested is what we like to speak to. Of course, your personal investment plan with your financial advisor may be a little different than this, but always we try to preach staying invested. And I wanted to focus on this blue highlighted area down here. If you were invested up to the election, then got out, you definitely left money on the table over the past history. Now, we do recommend always staying invested, and that previous chart really shows why, is because that seasonality months of November and December are typically very strong for the stock market. Even in an election year, we haven't had a negative month of November, I think, since 2008 in an election year, and we all know that was a little bit of a different scenario with the great financial crisis. So still very good returns can be done in November, regardless of who wins. Stocks do trend higher. This is a great chart that we like to look at over time to time, every 4 years when the election comes around, that over time, red, blue, stocks march higher. And it doesn't really matter who's in power so much for the long-term things. Short-term, yes, anything can happen, but for long-term, it comes down to the economy, the growth, and the corporate profit growth. Last couple of things I'll say here is, I can't exactly tell you who's going to win, of course. You may be seeing this and we already know the winner. But what I wanted to point out on this slide is that, split Congress, while it may not be good for passing a lot of legislation, due to some gridlock there in Washington, is actually very good for the stock market. So if we do get a split Congress, maybe it's one way or the other, and the other side is in power for the president, the split Congress is typically good for stock markets, as you've seen average of about 18% returns when the Congress is split. So even though not good for legislation, typically very good for the stock market going forward. So I hope you can tell there's a little bit of a message with this. It's to really try to put politics aside with your investing, focus on the fundamentals, because history really does show us that it doesn't typically matter who's in power. Red or blue, stock markets do move higher. And then finally, I wanted to note that, a lot of times we get some trade ideas. Clients may come to me and say, what do you expect will do well if so-and-so becomes elected president? Now, of course, there are a lot of narratives out there, clean energy, oil and gas, whatever it may be. There's really no discernible pattern. As I wanted to show you here, you can try to match along and try to figure out which one is the highest when a Republican is in power, or which one is the highest when the Democrats in power, but you really can't see any sort of sector differential, cash versus stocks. There really is no pattern, and that really speaks to the true nature of short-term markets. Everything is cyclical over time, but in the long term, being invested does win. So we always just say try to remain agnostic and remain invested and remain diversified, but obviously, get out and vote. So I really do appreciate everybody watching. Again, just to recap, the S&P has marched a lot higher so far this year, about 24%. We've seen middle returns for the month of October about flat, and bonds slightly negative. As this election nears and is over, stocks still remain in that uptrend. Bond volatility on the other side has increased due to strong economic results and potential higher fiscal deficit with either party involved. As the smoke clears, we do really expect to get back to what moves markets. That's corporate profits and GDP growth. And then finally, regardless of political result, market tells us to be optimistic, be invested, and remain diversified. So again, thank you for watching this, a little bit longer and special market update, market memo from Retire Path Advisors. We approach the management of your complete financial landscape very seriously. As a trusted steward, advocate, and confidant, we are completely committed to you. You can always reach out to us, myself included. Reach out to your personal financial advisor. info@retirepathadvisors.com. You see the number there. You can find a lot of great resources on our website as well around the election and other past video updates. So thanks again. Hope you're having a great fall, and please have a great rest of the year. Thank you.